All right, good afternoon or good morning, everyone. Welcome to our webinar on creating the winning pitch deck. My name is Jason Kennedy. I'm with Early Growth Financial Services. With me today is Gadiel Morantes, Chief Revenue Officer and Partner here at Early Growth Financial Services, and Marc Phillips with Arafura Ventures, who is our presenting partner on this webinar. A couple of housekeeping notes on the front end. Today the webinar is going to last about an hour. We'll do a short Q&A afterwards, and I encourage you to use the questions panel to ask any question that you might have, and then we pose those questions to our two panelists towards the end of our presentation. Any questions that are unanswered, we will follow up immediately afterwards. And of course, we'll have this presentation will be sent to you as a recording in a link in an email to you after the webinar. So that'll be available for you for viewing afterwards as well. We'll step right in here and go with introduce our panelists, starting with Gadiel Morantes with Early Growth Financial Services. Gadiel.
Thanks, Jason. Hope everyone's well this morning, afternoon, wherever you're at. Appreciate you joining us on this panel. We always have a lot of fun when we have Marc co-presenting with me, so I'm really looking forward to it. So as background, I'm Chief Revenue Officer at Early Growth Financial Services. We are an outsourced accounting firm that works with early stage and mid-size companies, providing them support around tax return preparation, filing, tax consulting, 409A valuation services. And the core business for us really is the day-to-day transactional accounting and CFO consulting services on an outsourced basis. So essentially clients hiring us to take care of their bookkeeping and CFO services. And then as companies grow and scale and enter that space of needing to fundraise or get out there and attract outside money, we help them through that process. And one of the key ways we do that is by partnering with folks like Marc and helping companies prepare their decks, executive summaries, and really fine-tune that story that they need to tell to potential investors. So this is a sampling of our clients, and I'm really excited to talk about the pitch deck with Marc.
Great. Thank you, Gadiel. And of course, that's a segue to Mr. Marc Phillips from Arafura Ventures. Marc, please say hello.
Good morning, everyone, or good afternoon. Thanks, Gadiel. Thanks, Jason. Marc Phillips here. I think we're up to, this is our third or fourth webinar using my book, which I wrote a couple of years ago to help entrepreneurs like yourself prepare themselves for capital raising. So I straddle both being an entrepreneur, failed and had some success. I'm Australian, but I've lived here in Silicon Valley and Palo Alto for 14 years, and Arafura Ventures is a micro fund, and we invest in predominantly B2B SaaS software. So today we're going to talk about the pitch deck and what makes a compelling or killer pitch deck for a venture capitalist. And, you'll hear from me. I'll talk about it from an entrepreneur's perspective as well as a VC's perspective. Gadiel will also, having, I think, 18% of all startups in the United States using, the services of early growth. It's phenomenal to think. But here's some of our investments. We can talk as much about that as you like, but I'll just sort of move on. Thanks, Jason, and get to the presentation. That'd be great. So we can spend the next 20-30 minutes going through this pitch deck, and we can have some questions. I essentially have a very strict slide methodology and format that I like to follow, and it's something that I think as an entrepreneur you can spend a lot of time on preparing the wrong presentation. So when you get in front of a venture capitalist, you're not prepared. You might spend 6 months, a year, 2 years building the product. You get half an hour, maybe an hour with venture capitalists. And I think it's just really critical that the deck has some format, some structure, some methodology to it, because it's not just about storytelling in a predictive, repeatable format. It's to different VCs. It's often the VCs that have to share your story, share your deck internally with other partners to get consensus. And I see so many times that VCs, my partner as well as other VCs we co-invest with, I get the same pitch from the same VC, same entrepreneurs, but they interpret it differently, or they walk away and discuss different points. And I think having a slide deck that hits the mark. So what I'm going to do is take you through real examples of these 12 slides. And I'm going to talk about real examples of real companies that have raised money that we've either invested in, I've been involved with, or I know the entrepreneurs. And that really was the genesis of the book that I wrote a couple of years ago, because there was not a lot out there for entrepreneurs. So let's dive in. Next slide. Thanks, Jason. Three things you should have on your first slide: a really inviting, emotive picture, illustration, image, the name of the company, and almost the positioning line, or what your elevator pitch is, what you stand for. And you can see this is a great example. It's got people, it's got the word hire, it's got SaaS, legal market. So in a millisecond, a nanosecond, the VC, who is often starved of, not just intellect, we're not the most intelligent people all the time, but time, you want to sort of visually hit them. And I always use the analogy of a billboard for a movie, right? We all see the billboard on the 101 or, at the bus shelter, and you go, wow, I want to see that movie. Well, the same applies to a pitch deck. You want to give it that immediacy with imagery, a keyword, and a positioning line. So that's really the first slide.
Jason, next slide, please.
All right, we're on to slide 2 on defining the problem. Can you guys see that okay?
We can see it. Mark, did we lose you?
Unfortunately I wasn't picking it up, so that's okay.
Sorry.
That's all right. I know this slide deck pretty well, so let me just open the other one a bit. So the next slide really is about the team and the management team. We can all see that. So, this is a real pitch deck. This company has raised over $10 million. It's got a bit of a rock star feel to it. So if you do have rock stars on your management team, put them up front. If you don't know the investors, it's probably a good idea to just introduce yourself. I wouldn't go on about your backgrounds and your team's backgrounds and what a wonderful team you were and when you met. I think people just want to get a sense of, wow, their level of experience. Pictures are always good, and also just the skill set. And I like this slide because it basically shows those three things: pictures, where they've worked, skill set, and I think that's enough. Other people put the management team at the back of the pitch deck, but I think if you don't know the investors, put it at the front. But most importantly, don't go too deeply into this deck. I think the magic in a pitch deck is keeping things moving pretty quickly. So as we move on to the next slide, which is slide 2, the problem we solve. And I'll cover advisors later on in the presentation, Gadiel and Jason, but slide 2, the problem we solve, again, it's like, I always say to people, in the first 3 slides, you can cover it in 2 or 3 minutes, right? Set the presentation up to be fairly, not fast-paced, but moving speedily along. And I mean that because, investors are curious, but they're also very impatient, right? So they'll draw their own conclusions pretty quickly about you, about the company, about the sector. So you want to move into the problem that you're solving pretty quickly. And I always say, you can talk about, we had this aha moment, but don't go into, we were sitting on a bus, we were at a fraternity party, we knew each other at high school, we, worked together. Just get to the point. The problem is X. And then you can move into the next slide, which is the solution. There's often multiple problems. Don't get too caught up in, the fabric of how big the problem is, right? There will be multiple problems, but just perhaps pick one major problem, because you just want to isolate that and magnify it. Perhaps it's the biggest problem. And this was a real deck of the slide that I saw, and there was multiple problems. But I like the fact how pictorially this entrepreneur had said, hey, these are the size of the problems, and I'm going to tackle these biggest problems first. The next slide is...
Marc, just to chime in quickly there, I think that's an important point that you're bringing up, because it's capturing that audience with that investor. And if you're trying to address all the potential problems that you're trying to tackle over the course of potential iterations of your product or your solution down the road, then it loses focus as to what the immediate need is and how you can really start building the company based on this one problem and finding that solution, right?
That's exactly right. That's exactly right, because you're going to have problems that you don't know about. But, once you're up to that third slide, and I've sort of skipped the second slide, but, actually, if we just go back one, Jason, sorry, guys. If we go back to this one, so this company is called The Books. They raised a series of $10 million recently, and I saw their original pitch deck. The guys are in LA, good guys, and this was a couple of years ago, and I said to them, this is a very difficult problem slide to comprehend. You can see it. You've got to look at 5 different components of information and images on the page, and you've got to get your gears moving, and cognitively you've got to process all this information about the problem. Okay, yeah, okay, and they're just delivering flowers cheaper and faster. And I said to the guys, you probably can do this slide more justice by keeping it really simple. Remember, human beings, like venture capitalists, probably can remember 2 things, not 3, and at most, they can really wrestle with one statement, one question, one fact. And so, I gave you 2 examples, pictorially problems, and this one is, if it is a convoluted problem, just what I'm saying is don't get too stuck in the weeds discussing it, because you've got half an hour and you want to keep moving. So the next slide is the solution. And, if you think about the theatre of presenting, the actual, it's like the person at the dinner party who's telling the joke, and it gets to that point where you're thinking, is this going to be funny or is this going to dive, right? Is this not going to work out? Is the punchline, has the storyteller, joke teller ruined the joke because they're waffling on about the joke? And the same goes with the pitch deck. So I always say to entrepreneurs, inside the first 2 minutes, go through who you are, what you are, your name, your problem, and the solution. And the solution can be, because you're lifting the hood, you're unwrapping the present, right? And that might be, you pull out your mobile phone, you show the VC the app that you've built, or you pull out your tablet and you swipe and you say, here it is. Or you show pictorially the solution, what it is. Because we're all hoping to see the shiny new thing, right? So the solution, and that's the wow moment, right? You know, think Steve Jobs unveiling the computer, right? Or someone at TechCrunch who's on stage presenting. You know, you have this anticipation of, I'm going to see, I'm going to hear from these smart, you know, people, entrepreneurs in front of me. They're going to show me, they're going to take me into the future. And so part of that theatre is done in a short period of time. So slide through the solution. Sometimes it is, you know, complex, and you need to explain how servers work with middleware, or middleware works with the front end, or you need to show, you know, how a workflow is more efficient, how bits of technology work together. You also want to show what I call the user experience, right? Often I say to these, you know, entrepreneurs in a meeting, I'll say, guys, back it up. Can you just explain, I'm a user, I'm in front of my computer, how do I engage with your product? Or I'm a business manager, I'm an IT, CTO, CIO, how do I onboard your solution? So I think in the solution section, don't just show them how magical the interface is, how wonderful the app is, but you also want to sort of lift the hood, you know, dive into perhaps the architecture a little bit, how it works, and that is really just sort of a layup for probably the next slide, which is perhaps when, you know, the CTO might start talking. He'll start to really sort of introduce himself, because as the CEO, I guess you're leading the conversation. You don't necessarily want to, you know, you want to give a balanced view to the venture capitalist that this is a team effort, right? You know, one of you is a business person, the other one's a technologist, or you're both technology people, but you do understand the business environment. So, Gadiel, do you have anything to add there on just,
well,
sort of, you know?
Yeah, I think on that point, one of the important pieces is to really rehearse and plan out in advance who's taking what slide. It's more of a delivery than anything else on, you know, if you do have the business person and the CTO, you know, practice through what topics you're going to address and what topics they're going to address, so you're not stepping on each other's toes. And that really allows for that dialogue to go back and forth, and for certain people who are presenting as co-founders to field questions and to address issues and things like that. That's my biggest advice around that. But I think the rest is you've already touched on, Mark.
Yeah, I was on a call yesterday with a couple of guys, and they did exactly that. They took 2 alternative slides, and I thought it was scripted, and I kind of liked it because I realized that they'd rehearsed, right? And you know, you can't do anything except respect a rehearsed pitch. Slide 4, the market size. So, you know, by now you've got the VC, you know, vacillating on how amazing your product is and how big the problem is. And now you want to, you know, validate the market size. And how do you do that? Sometimes it's really easy, right? It's like, you know, the market for, you know, Teslas is global, right? Every car owner at a price point, of course, you know, or, you know, Facebook. I, you know, use the internet and I went to school so I can upload photos and connect with classmates. So, but sometimes you're in niche verticals, and sometimes the markets are very new. But the reason we want to see some type of market sizing is to just run a very simple math of if this company got 1% of the market or 2% of the market, would that be a significant company, right? This is not the prettiest slide that I saw of this company, Parent University, which raised $500,000, did not make it. And I like to include slides of companies that weren't successful, as many as that are, because that's the reality of the business that we're in startups. But this was very simple, not pretty, not elegant, but I could understand the math calculation that this entrepreneur was explaining how he put his market size together. And so on the next slide, we'll see a couple of interesting ideas around the market size. And essentially, there's an initial market, which is the grey box. And that initial market might be the market that you're going after initially, right? That's they're the first segment or the first geography. It's our first product that we're bringing to market or our first service, right? And then but it's not the total market. There are others. It's the serviceable market is, that what we could get tomorrow, next year. It's not what with the amount of money we're raising today, we're going to be able to service, but it is possible. And I think when I see a slide like this, I realize the entrepreneurs have thought through, okay, it is a big market. They can't get it all today, but they're going to take stepping stones. And the total market is actually a lot bigger. And that's what you'll often hear, acronyms of TAM, total available market, SAM, which is a serviceable addressable market, but there's also an initial market. And that might be the pilot, it could be the first 6 months. Particularly when you're pitching, it's important to do this because often your financial forecasts are only, 2 years at best. And therefore, you want to make sure that you're not grandstanding this huge opportunity that your business plan and the funds that you're raising cannot execute on. Gadiel, do you have any thoughts on that?
No, I think that's an excellent point right there. And it's funny because when we talk about fundraising and we talk to companies that are out there and putting together a pitch deck and executive summary, the question we get often is, am I building a 3-year or a 5-year, financial projection or a model around that? And it's a great exercise to go through that 5 years, but knowing that, to your point, knowing that maybe the first 2 or 3 years are pretty well dialed, but the business can change quite a bit in the course of those 3 to 5 years. So it's kind of like, as an investor, I'm always curious to hear, like, are you if you're looking at a 5-year forecast, I mean, the focus is really on the first couple of years, where the capital is going to go and things like that, knowing that this would be great if we achieve all this and if everything goes to plan, but there may be some pivots or adjustments along the way.
Yeah, that's exactly right. So it's one thing you really want to think about a triangulation of 3 slides: the market size, the go-to-market, and your financials, right? So you can't say to a venture capitalist, hey, we've got $100 billion opportunity, and then say we're only raising 1.5 million, and our financial forecasts are 2 million in sales, because we want to understand that you can build a business, you can raise enough money to meet that market size opportunity, right? So I think that's when we get into the second, third round discussions with entrepreneurs, that's what we're really honing in on, right? Because we often say, listen, raise 1.5, 2.5, 3 million, get to that milestone, that product release, that revenue, that head count, and then go after, the bigger market or release the next product to go after the the next set of customers, right? So you want to, often in a VC pitch, what you're doing is you're building trust. And you've got to build trust through these slides and understand how they all work together. So on to the next one. Thanks, Jason.
And Marc, just to jump in there really quickly, and part of the reason around that, you as the investor, you're looking at, not only the investment I'm making today at let's say, a seed round, but also the potential of that next round of funding, that A round, right? I mean, you're always looking ahead to not only the growth and the opportunity, but also the potential of additional investment as the company is trying to capture more and more of that market. Is that the case?
Absolutely, and I'll give you a real-life example. One of our portfolio companies is a company called Transifex. Transifex has, they raised $6.5 million. We've invested in 2 of their rounds. We were one of their earlier investors. 37 staff. They have a SaaS product, and they have just released in recent months a self-service product. And it's the self-service product that actually has a huge market opportunity, perhaps bigger than the SaaS market, right? So, again, they started at an initial market size. They built their product, developed their technology, realized that there's actually a self-service, self-provisioning product that they can offer developers, every developer globally, every web publisher. And so that's a classic example of how, if they had come to me 3 years ago and said, we're going to do this self-service model, and everyone's basically going to be able to use this, I would have looked at them and thought, there's no way that you can do that, right? So, because I would not have believed that market was there, that market size exists. And so that's just a sort of realistic example in my wheelhouse of companies that, I talk of. So slide 5 is really, again, the architecture and the product. And really sometimes my point here is often hard for investors to see what you see, right? You've got to pictorialize it, put it into pictures sometime. I saw this pitch deck of, this was a software for the utilities, and I didn't know a lot about utilities, but this entrepreneur put it into this format. I'm like, I could see it. I'm like, okay, there are telephone poles, there are wires, there's servers, there's buildings, there's houses, there's connections between them. And, this was a mesh network. So I think trying to explain something in words is often the worst thing you can do, because you may not be able to articulate your 15 or 20 years of knowledge to a VC in 4 minutes. And so my point here is that when you're trying to explain the architecture, show, not tell, is 9/10 of the time a much better execution of a slide. Again, on the next slide, we look at another example how an entrepreneur showed me how it works. And I guess this is really where your CTO can shine. The technical person can say, here's how the stack works. And if you look at this slide on the bottom right section, you'll see all the stack, how the servers interact with the databases, how the databases interact with APIs and business intelligence. And then on top of that, you've got the screen grabs of the dashboard. Now, I use this example because it's a really good example of having a parallel conversation. Because often the venture capitalists have been, CTOs, VP engineerings, right? They've built software. They're coders by heart. They want to get a sense of, tell me how this really works. And so you want to be prepared for it under the hood and above the hood. So you want to show the GUI and you want to show the technology. And that's just a good example that I saw. And another good example on the next slide is a company that raised $2 or $3 million, company called Packet Zoom, and they, you can see that, right, Gadiel? The screen's just lagging.
Yep, it just popped up. It's
Right.
where we're packaging.
That's the internet. So slide 5 on how it works. This company, I saw this pitch deck. It made perfect sense really quickly. 2 engineers, ex-Google guys, just said to me, hey, when you download an app, it can be clunky. We have an SDK, sits in the cloud. We make it faster. I'm like, I get it, right? So using very simple pictures, diagrams to illustrate the technology architecture is important. So I don't really need to talk too much more about that, but just be aware that, seeing is easier. Slide 6.
Yeah, and Marc, just to add to that part of it is also understanding how the process works when, as an investor, you're getting teed up for whether it's an introduction or getting teed up on the business and the opportunity, right? So that's why I think making these visual, easy to understand slides make a lot of sense, because I know when we reach out to you for one of our clients that's in the mode of fundraising and saying, hey, Marc, we've got a potential introduction for you. Here's a quick blurb on the business, but then here's their deck. So a lot of times you're using this deck as a teaser. So if it's too complicated or overly structured, then I would assume, and by all means you can let me know, but that will just confuse you instead of kind of, if it's easy to understand. Now you can potentially say, you know what, I'm interested in that business, I'm interested in that product, and then, let's facilitate that introduction. Or, I understand what they're trying to do, but, these are my thoughts on that market. Is that the case from the investor side?
Absolutely. I think less is more. I mean, the older I've got, the more pictures I've seen. Less is more, because you tend to form, an opinion pretty quickly. Like, we're into slide 6 now, and by now, probably the VC's thinking to themselves, I'm interested or I'm not, right? You're 50% of the way through the deck, and the VC's got a sense of huge market, great team, okay product, or amazing product, market's too small, technology looks kind of, so don't be confused with, the story as how you're telling it compared with what the VC is interpreting, right? So again, I think I just think taking it up a level and not diving down into the weeds, particularly when you're early stage, is kind of important. There is a level of dexterity and detail later in the slide deck, which, financials and go-to-market and team. But I think those first, half a dozen slides are critical, because the VC is pretty much going to be thinking in his back of his mind, I'm interested in this or not, right? So, pictures often help. And then on slide 6, actually, this was a company which sold to Nielsen. I was one of the earliest investors and helped a little bit with the UI because of my background in analytics. But this was a good slide. It's a real slide. It was a real pitch deck slide. And it basically not just shows the user flow, but it shows where the IP is. And you just don't want to tell people how it works. You want to tell them 2 things. This is purely scalable technology, right? Like, it's viral, it's automatically, how do I get that hockey stick growth? That's what VCs want, right? High risk investing warrants or tries to find high growth business models. So scalability, showing that your business or the tech platform is scalable is hugely important, right? The other side of it is it's defensible. It can't be copied. It's got, deep tech. Me and my co-founder, you're telling the VC, spent 7, 8, 10 years in particular companies. We've got deep domain expertise, and we always look for that in founders, right? Is there just an innate sense of defensibility through the knowledge that one or more of the founders have got? Hopefully combined knowledge, right? So I think, before you lodge patents, before you start filing lots of, trademarks, you want to get a sense that, the investors want to get a sense that within the founders and the technology, that there's defensibility and scalability. And another way of saying that is, that there's some magic to you. There's something that that's in your mind, that you have an understanding of the market or a technology that they don't, right? Nothing turns VCs on more than them thinking, oh my goodness, these kids or these entrepreneurs sitting in front of me, they're really smart and they know something that no one else knows, right? So, and when we think of all of our iconic heroes of, technology, that's what those people are able to do. They are super smart and they've got an insight into some product or technology that no one else has. So that's just some thoughts around IP, defensibility, scalability. Gadiel, do you have any comments on that?
I mean, I think you touched on it, right? I mean, I think it's that forward thinking, and we mention it to companies all the time on making sure you're capturing your IP and making sure that, if it is truly something that's that unique, that it's important to highlight it and to also know that you've thought through it as a business and is part of your business model as you grow and scale. It just makes you that much more attractive to potential investors down the road.
Yeah, and feel free, everyone who's listening, to ask any questions. But at this juncture, I kind of like to throw the pitch tips out at you. And, we've always got two voices in our heads when we're presenting. One is the voice we're projecting, and the other one's that little voice in the back of our head that's talking to us. And I always sort of like to have a checklist in my mind when I'm presenting about different things I just want to cover. And you should too. And I think a couple of tips. Obviously, deeper pocketed investors are more important. Shorter sentences, not technical speak. Don't bring your acronyms and your jargon into the meeting. Speak clearly and plainly. I don't think, overcomplicated language impresses venture capitalists. In some respects, you've got to be able to dumb it down, right? I guess investors do watch body language. I do. I think, we want to determine if you're confident or not, if you have got good, sort of feng shui relations with your founding team or your co-founders in the room. Do you guys get along? Do you complement each other? I always sort of, tell entrepreneurs, maintain eye contact. Don't look away. Eyes are the souls of the heart, right? You look into someone's eyes and you trust them, right? Or you don't. You believe them. That's the whole reason why, look at me in the eye when I'm talking to you, as, parents used to say or teachers would say, and they do it because they want to work out if you're telling the truth. So that is critical. I've mentioned about deferring to CTOs and co-founders in conversations or pitches. Keeping a momentum or a pace in a presentation is important. It's part of it is it sets the agenda. It's like, look, I'm the entrepreneur. Let's keep moving. If a VC wants to stop and ask a question, of course you've got to answer it. But I would try and keep your momentum going. It's a bit like when you're running a race. It's a bit like when you're, doing any activity. You want to keep momentum because that's, it is your presentation. And I always say to entrepreneurs, look, you talk, I'll chime in. You got 30 minutes. Any deeper, more thoughtful questions I'll ask later. So I think that's important. Be prepared for a bit of conflict. I think some VCs aren't gregarious and easygoing as I like to be. Some of them will be, deferential. They'll be combative. They'll say, I don't believe you. I've seen that before. Or they'll just point blank say, that doesn't make sense, right? And they may have a bad day. So you've got to be prepared for that. Sometimes it's role playing. Because if they're going to invest, they realize they'll be on the board. If they're writing a bigger check, they're going to have conflict with you. So they might just be role playing to see how you respond. And that's sort of that emotional timeline, that prepared for the conflict. And then analogies and anecdotes. I like to use them just because it makes life a little more colourful. I say to entrepreneurs, it's often easier for people to understand concepts and the future if you create analogies. And then probably the thing that you want to come back to often is reiterate team, market size, and product fit. They're really sort of your summing up lines. So you've got a great team. Our team's awesome. We've all got deep domain expertise. Or it's a huge market. It's an untapped market. This is a fast-growing market. Or the product, right? It's a fantastic product. People love the product. Testimonials. Those three things, team, market size, product fit, are what venture capitalists really look for, right? They're the things I sit back in my chair when I'm listening to pitches or after the pitch and I say, do they have two of these? If they've got two, we can work on the other three, on the third one. Gadiel, feel free to suggest what you think some pitch tips.
No, absolutely. I think one of the things I stress is just, I think we talked about it a little bit earlier, is make sure you practice your pitch. Take every opportunity to practice it with, your strangers, friends, family. If they get it, then, and they get the message you're trying to communicate, then an investor will absolutely get it. When we talk about these, and you mentioned it earlier, is you have a pretty specific window of time, and getting in front of an investor, you have a half-hour window where you have to be respectful of that time, you have to be concise, you have to deliver that message, and you have to do it with a bang so that you become memorable. So I think being respectful of the time is a huge component of it, but then understanding that if the investors are asking a lot of questions and really interested in what you're talking about, those tend to be good signs, about the company and about, the opportunity. So I like to say, practice it, but also be loose is not the right word, but just be comfortable with the messaging. And the same thing with your, 30-second elevator pitch. It really is an opportunity to be as concise as possible in delivering the message for what your company is doing and the opportunity that there is for you as well as the investor on that end. And these are all fantastic tips just for, frankly, any presentation you're giving. I think these are all fantastic tips that you've outlined here, Marc.
So I have a question, gentlemen, that came in that I think would be great to ask right now. It was a question about being prepared. Are there any times where a VC will want to jump around the deck rather than wait and listen to the entire presentation? Should entrepreneurs be prepared to bounce around their pitch, or do VCs tend to wait until a Q&A session or the end of the pitch to really get in and start asking specific questions?
The only time I jump around is if the entrepreneur is taking too long and, they haven't kept the momentum, right? And I know they're going to run out of time. And so I think it's very respectful to give the entrepreneur a heads up. I've got half an hour, I've got an hour, and, let them talk, right? We're very aware that you've done all the hard work here, and we're listening to, the opportunity of being part of a very exciting company that you're building. And so, I think it's really our duty as VCs to let you talk and not jump around. But if you are, behind or off track, you can say, hey, do you mind if we just, move to the next slide? It's probably the the nice diplomatic way to say it, Jason.
Great, thanks. And it's a great segue to move on to the next slide.
And we need to, because we've got 10 minutes, I've got 4 slides. So go to market. So it's really about you need to just, tell the VC how you're going to market. Is it partnerships? Is it direct? Is it self-service? Is it, through resellers? How are you actually going to go to market? And it's something a lot of the product guys don't spend a lot of time thinking about when they're building the product, right? And I know a lot of the accelerators and incubators, they forge that, right? I'm a mentor of Alchemist Accelerator and a few others, and I know that those principals spend time with those inductees working on this slide. So give us some thought, think about it, speak to people, evidence in the pitch that you understand your go-to and your distribution. Next slide, thanks. Competitor matrix, look, pretty basic. One of the slides that's the least put into venture presentations and the most important. Rule number 1, there are always competitors. Rule number 2, if you don't tell us, we'll find them. Rule number 3 is tell us in an informed way, because competition is good. It validates the market. You can't be all things to all people. It allows us to work out, with this much money, do they have a clear advantage? I'm going to look at these different competitors. I'm going to get more excited about you as a person of technologies, as an entrepreneur. If you come to me and say, there are some competitors, they're not doing these 7 things, and we're going to do them really well. Think of Google, right? The search market was proliferated. They came in. Okay, so there are a lot of competitors. Put them in a matrix. The next slide will show another example of a competitive matrix. And the next slide will show you another example.
I think that's a great point you're highlighting, Mark, is just, because a lot of the companies that we speak with do think that they are the only company doing what they're doing in that market. And this really just proves and shows to the investors and other folks that you've actually gone through the thought process of doing the homework and the research to really figure it out.
Yeah, because we're going to find out. We're going to ring people, other VCs, people, and we're going to work it out, right? I mean, that's what analysts in VC firms do. So you're much better instigating the conversation instead of saying we don't have any competition, right? The next slide is on revenue projections. I don't think Excel spreadsheets with 7 sheets are the answer. I like to see in a pitch deck 1 slide, 2 or 3 or 4 years of revenue projections, top line, operating expenses, staff, capital, and most importantly, I want to see, what kind of cash burn you've got, which is that EBITDA in this example, and the head count. I want to get a sense of, okay, year 1 revenue, 2016, you're going to be doing $800,000. Great. And you've got 9 staff, your burn is, $100,000 a month. Okay, I can get that, right? You need 1.5, that gives you 18 months of runway. Something like that. You want to make it pretty easy to digest, right? So I look at because again, VCs will only remember like 1 or 2 numbers, right? And it's forecasted revenue for next year is X, cash burn is Y, number of people is Z, and they're raising, $1 million to get them 12, 18 months down the road to employ, 8 or 10 staff to get a number in revenue, and that's how we internalize this revenue slide. Another way of looking at projections is just pictorially, but financial unit economics is one of my favorite calculations I like to do. Often we reach out to people like Gadiel and Jason and David, and it's kind of how we all met, to be honest. We have so much emphasis on financial forecasts. We need to get them looked over by experts, and we bring in experts like Gadiel and Jason into our portfolio companies to help with bookkeeping, with tax, with financial forecasting, with investor reporting. It's super important, but it's important to do it before you actually step into the VC meeting, because most of us are pretty good with the money and understanding how it's spent, and most importantly, every month we want to see financial reports. So if you don't have, if you did engineering or computer science and you're not blessed with financial literacy, it's important that you find a part-time bookkeeper, an accountant, someone like Gadiel and Jason at early stage that can run their eye over your financial projections and make sure that the assumptions are intact. And Gadiel, you might want to just give some heartfelt advice to the people.
Yeah, I mean, it also talks back to building out that 3 to 5 year projections in that model. It's really looking through how we're looking at the total opportunity for the market, where that money is going to be spent, all those things. And really what you're doing here in the deck is just you're really painting that picture for those investors, but a lot of this gets discovered during the diligence process. So I think the important thing in these slides is to really highlight the key points that are going to resonate for investors and give them an idea that you've thought through that model behind the scenes. And that's where you're going to uncover more and more of those details and go through that. And so we help a lot of companies with this, especially at that stage when they're right about to fundraise or getting into the fundraising conversations with a lot of the investors. But I think these are 3 great examples of just looking at projections and, hey, we're going to do the ask of how much money are we going to raise and what that's going to look like and where that money is going to get spent.
And advisors are important because, pick advisors that can do things that you can't do. Pick advisors that if your company fails, they're still going to like you and you're going to like them. And pick advisors that are doing it not for the cash, but they're doing it to help you because they like you or they believe in your mission. And there are probably some golden rules around picking advisors. Anywhere from a tenth to a quarter of 1% stock vesting monthly over 12, 18 months is a good benchmark to draft up advisor agreements.
And then, the part here that I like to throw in is really talking to the advisors as to what are they going to contribute to the business? What is that advice going to be? And knowing that as a business, the advisors and their involvement changes over time as well. I mean, you could have an advisor to be your early stage advisor for a year and a half, but then you need somebody with a different set of expertise as your company grows and scales. So it's ever changing from that perspective.
And, I think it was, it's kind of the show me the money slide 11, right? I mean, people want to know how much you need and what the valuation is. You walk into any store, you see the price, you think, okay, I'm either going to buy it or I'm not. And VCs are often the same. We want to know how much you're raising, what the minimum raise is, what the maximum raise is, what the valuation is, just generally what you're going to spend the money on, right? So you want to give a sense of, well, if valuation isn't determined and you are looking for a lead on a price round, I understand that, right? So it's fair to say, look, we would love to have you lead the investment, and I'm happy to talk on valuation. And then you might say, look, I've got guidance on valuation from my attorney or friends, or there's comparable other companies at our stage with our traction have raised. And so, there's a couple of different dynamics that go into the valuation, but by and large, you want to come to a meeting and say, we're raising X at Y, right? Make it very clear cut for the investors so they know how much you're raising, what they can contribute off that amount, because we all have our allocations we like to get, right? And we all have our valuation ranges, right? So some are, I don't mind it being higher. Some are like, I want it to be, very sensitive to valuation. Next slide, thanks. And last slide, at the slide 12, at 12 o'clock, so we're at the top of the hour, is exit strategy. Some entrepreneurs don't like to put it in. I like to see the exit slide because I know, hey, if Cisco are going to buy the company potentially, maybe I know someone at Cisco and I can reach out and see if they're prepared to, look at, is this on the radar, right? Because we want to know how we're going to exit the company, probably as much as you do. And so, you don't want to get distracted by saying, I'm going to build and sell this thing, but you also want to give a sense that you understand where the exit or the potential exits are. That's it for me, Gadiel.
No, that's fantastic, Mark. And I know we're pushing up on time, so we've got our contact information here, but I want to thank you very much. I know I just gave a talk on fundraising yesterday, and the pitch deck component is a big part of every one of those conversations. And I really do recommend all the entrepreneurs out there and first-time entrepreneurs to go out and read Mark's book. It's a fantastic read, and it really gives good insight for all companies out there looking to fundraise, especially in the interesting Silicon Valley, tech climate that we're currently in. So, Mark, thank you very much for that. Really do appreciate you taking the time to join us on this.
No, I like doing it, and thanks, Gadiel and Jason, for hosting and co-presenting, and to everyone listening, good luck, and I hope today has just been, helpful and insightful, and we all look forward to hearing from you. Have a good afternoon.
Great, thanks everyone. And just as a reminder, the link will be available in an email coming to you after the webinar, and we'll have a link available on our website, earlygrowthfinancialservices.com. Thank you for attending, and please reach out to us with any questions. Have a great rest of the day, guys.